Well, this is a central bank decision, but the ripple effects, guys, are going to be felt in a lot of different ways. The big ones and the big pieces of this we're going to be getting into throughout the show. You have the housing impact, how the key interest rate here, which dictates particularly variable mortgage rates, how this will affect, well, a lull, for putting it mildly, in the housing market and sales these days in Toronto. But then we also have to talk about tariffs, and that also we will be discussing later on in the show. But with all of this together, it's creating let's call it a triple cocktail of economic uncertainty. And if you've ever worked in business, uncertainty does not make investment happen, or certainly happen all that quickly. We heard from the Bank of Canada Governor Tiff Macklem earlier explaining how looking south of the border and the economic slowdown here, how all of this pieces together.
Uncertainty remains high. The Canadian economy is softer, but not sharply weaker. And we've seen some firmness in recent inflation data. Against this backdrop, we decided to hold the policy rate unchanged as we continue to gain more information on U.S. trade policy and its impacts.
So the Bank of Canada is doing a bit of a seesaw, or really walking a very delicate tightrope right now. Arda, Bakari, when you think about it, when the economy slows, usually you try to lower interest rates to help drive people to spend more because borrowing costs go down. But then when it's inflation, which, by the way, is still above the target, when you look at the core inflation rate, that usually means you want to raise the interest rates to sort of slow down the economy. We have both of these things going on at the same time. This is why we're in a wait and see approach. Back to you.